My name is Ellis Bennett. I'm an FCCA chartered accountant. I'm the owner and director of EA Accountancy. We specialize dealing with agency owners, young entrepreneurs, startup businesses. We deal with approximately 400 clients that range from all different sectors, different niches, and different types of income. And today I'm here to answer your questions.
I'm employed full-time and I have a small side hustle, such as freelance income. Do I need to submit a self-assessment, and how do I combine these incomes properly?
So your full-time income, if that was the only income that you had, you don't have to submit a personal tax return as long as your income isn't in excess of 150,000. Now, if you've got a side hustle, slash freelance income, you have something called a trading allowance. So you have £1,000 a year you can earn in revenue, not profit, without having to declare that on a personal tax return. As soon as you exceed that £1,000, you need to register with HMRC for something called a UTR number, so unique taxpayers reference number, which allows you to submit a personal tax return every single year. On that tax return, you will need to put all your sources of income, regardless if they've been taxed or not. So on that tax return, if you had, say, 3K of profit from a freelance like side hustle, plus your employed income, both would be combined together.
Okay, so £1,000 is the key number.
And can you clarify, does that apply to any age? It doesn't matter if you're under 16 or under 18, etc.
Correct. That applies to any age. So as long as you exceed those thresholds, like people get confused with the personal allowance of £12,500. But that's almost irrelevant because you could submit a tax return and still not have to pay tax. But HMRC would still want to know what the revenue and expenses for that business is, as long as it exceeds £1,000 from revenue.
Interesting. Okay. All right, on to the next one.
If I'm new to self-employment, what counts as allowance expenses? So is it home office, equipment, travel? What can I reasonably claim, and what proof should I keep? So
there's a general ruling on HMRC. There's no ruling to say anything cannot be a business expense. The ruling is as long as it's wholly and exclusively for the purpose of business and it's relevant to pushing your business forwards and there's no personal use or gain from that expense, it then becomes a business expense. Give you an example of this. Yes, you've got home office written down. HMRC do allow £312 a year for that expense. Yes, as long as it's used for business. For example, the headphones we're using, the laptops we're on, that sort of thing can be a business expense. Travel is a slight grey area, I guess, because people think you can travel to, I don't know, a conference in Ibiza. The conference is one day, but you're there for a week, and HMRC are going to ask, why are you there for a week if the conference is there for a day? They would disallow that expense if that's the case. They want you to be there for the conference. And maybe you can have a day either side. Obviously, you do the traveling, etc. Then it becomes an allowable expense.
Okay, what about the proof?
Does that make sense?
Yeah, sure. What proof should you keep of these expenses?
Typically, receipts is what HMRC would ask for if they investigated you. With the traveling thing, it's a case of they want evidence of you being in a certain place for a certain reason. For example, you come to Manchester to shoot a podcast. Proof of who you shot the podcast with, what was the purpose of it, did it move the business forward, and that sort of thing.
What about just bank statement? Is that fine, or do you have to have a receipt?
No. Bank statements typically won't pass HMRC investigations because, say, for example, you purchase something from Amazon and you've got a bank statement to prove that. But the reality is you can purchase pretty much anything from Amazon, so it doesn't actually detail what you've actually purchased.
Okay, sure. Okay, is VAT for a self-employed freelancer basically extra 20% on top of tax? If I pass the threshold, will I have to raise my rates or absorb the VAT myself?
Okay, so the first thing is the threshold. What is the threshold? The threshold is £90,000. So if your income exceeds £90,000 in a 12-month rolling basis, it doesn't reset every single tax year. It's just 12-month rolling basis. If your revenue exceeds £90,000, you need to register for VAT. Now, the key thing is where your clients are based. If you're dealing with just UK-based clients, yes, you need to register for VAT. If you've got clients outside the UK or outside the EU, potentially you don't need to, depending on what service you provide to them. Now, do you need to charge VAT to every single client? No, only UK-based clients. Again, There's a slight caveat, it depends on what your service does and where it's located and situated. As a general rule, £90,000 is the threshold. Your service is £1,000, you then charge 1.2k, so 20% on top. Your client pays this 1.2k to yourself. That extra 20% isn't revenue yourself. Like, you're not taxed on that. What's actually happened is you become a source of revenue for HMRC because you're collecting tax on their behalf. So that £200 extra you receive, you have to pay over to HMRC.
You can expense that. So when you buy something, you don't pay the VAT.
So you'd still pay the VAT to, say, I don't know, say you bought a laptop from Apple. You obviously pay the VAT across to Apple, but the VAT you paid, you can reclaim.
Yeah.
So
okay.
what typically happens is you've got a VAT quarter. The VAT money you've received minus the VAT money you paid out, the net difference you pay to HMRC, or HMRC pay you back.
So in sort of the grand scheme of things, would you say it benefits companies because they're not paying that VAT themselves and they pass it on to the customers? Or is it more of a negative thing? Is it more of an added tax to companies?
It very much depends. If you're dealing with businesses that are VAT registered themselves, they'll typically have no effect on them because they can reclaim that VAT. The issue becomes if you're dealing with businesses or individuals that aren't VAT registered, you need to make a decision. If you become 20% more expensive, you absorb that VAT, or you do a bit of a balancing act, a bit of both.
Interesting.
So it very much depends on who your customer is and are they VAT registered.
Limited company versus self-employed. How do the tax regulations change?
So limited company, what actually is a limited company? It's a separate legal entity to yourself. So from HMRC's eyes, there's a business and an issue. Once you become a limited company, two completely separate things. In comparison to being self-employed, you are the business. That's where limited and unlimited liability come into play. So, for example, you get sued as a sole trader, self-employed person, they're suing you as an individual. So any personal assets you have, essentially debt collectors could collect to pay off a debt. Split that to a limited company. There's obviously slight caveats to this. If a limited company has no money and a limited company gets sued, the company can close without having to pay those debts. There's different tax rates depending on limited company, self-employed. Typically, limited company, you'll get dividends involved because they're distribution of profits, whereas self-employed, every bit of profit the business makes, you personally get taxed on that. Whereas limited company, yes, the company gets taxed on its profits, but you personally only get taxed on the money you take out of the company.
Okay, interesting.
You talked about liability there. Now, what's stopping someone opening a private limited company, running up debts, not being able to pay it back, and then just closing it?
People do try that. People trying it with bounce back loans of COVID. Obviously, if something legal has been done wrong, like you've actually opened a limited company on purpose just to rack up debts, they can sue you because something like legal has been done wrong. But if the business is naturally traded and it's accumulated debts, and you actually try to make the business successful and just generally fails, that's where there's that safety net, I guess, as long as there's no personal guarantees in these debts.
Yeah, cool. So anyone listening, don't get any bad ideas.
Okay, the next question is, what should I be regularly doing in my business if I can't afford an accountant yet? I guess, is there any software people should be looking at that's cheaper, or any just tips and tricks you'd have?
So a few things to note. As a very basic advice is I would get a business account, which is exclusively for the business. If it's like a side hustle, your income and expenditure gets paid into and from that account. Do not mix that with personal account. Starting from April 2026, MTD is coming into play. So making tax digital. Essentially, that means if your revenues were £50,000 for the year, instead of you submitting an annual tax return, you need to submit an annual tax return plus 4 extra tax returns. So one every 3 months. Comes a bit of shock to a lot of people. That needs to be submitted via an MTD compliant software, such as QuickBooks, Xero, anything like that. That's the two which we use as an accountancy firm. Those are the two that we suggest clients to use.
Do you not feel they're just making things harder and harder and harder and less accessible for, let's say, a more normal person to get into this?
I would say 2 things. The reason they're doing it is they don't see how much people are earning until last minute until they submit a personal tax return. Now, what their eventual aim is, if you're employed by a company, you pay tax on a monthly basis. If you're self-employed, you pay tax annually, typically. The eventual aim is you submit a tax return quarterly and you start paying tax quarterly. 2 reasons. They're collecting a lot more tax money throughout the year rather than just one lump sum at the end. And they also have visibility on what you're doing. It's that element of control, visibility, and essentially cash flow.
I assume that's good for accounting firms. You're going to be more needed at more times of the year.
2 things. It can be good. I think our fees have to reflect like there being more of a demand in terms of having to submit things quarterly.
Okay, yeah.
The flip side is there's a lot of new software out there, which can be good if you know what you're doing, but can equally get fucked up quite like fast if you don't know what you're doing.
Okay, and our final question kind of builds on what we discussed earlier.
So how do you stay up to date with legislation affecting you? Or are there any specific websites, newsletters, or social media accounts that people use to keep up?
So it is one of the downsides of being an accountant is legislation changes over time. Like every single government budget, something comes into effect, which is going to affect one of our or multiple of our clients in different ways, different circumstances. Now, given, say, the budget that just recently passed, how we do it is I'll watch the budget live. Now, it's boring as fuck, not gonna lie to you.
I can imagine.
I take notes on the back of it, obviously, read my notes, try and understand how it's going to affect our clients, and then we'll post a newsletter out to our clients. We also have a newsletter which we publish ourselves every single week, how things are changing in the business world and how it's going to affect them. In terms of newsletters and specific websites, no, I don't typically use any of the HMRC legislation. We get the information from HMRC and then make it more digestible, because I think there's a lot of things out there which you'll see prior to the budget is accounts on social media trying to pre-predict the budget. And my honest answer is a lot of it's bullshit. A lot of it's just clickbait. Like they're talking about VAT thresholds changing. Never happened. It never come to fruition. And it creates more worrying concern to businesses than it's actually worth, because they're worrying about VAT thresholds changing when it didn't actually happen.
I want to know your takes on the dividends, what they did to dividends in the recent budget.
So they increased by 2%. So basic rate tax went from 8.75% to 10.75%. High rate went from 33.75 to 35.75. Honest and personal opinion is the Labour government was insistent they're not going to tax the working people. Now, I don't know about you, but just because you're a limited company doesn't mean you're not a working person.
Yeah.
Now, it seems to be they've targeted business owners. I think every single budget in recent years target business owners and makes it more difficult in the UK to operate and run a business. As you'll see, so many people leave the UK to operate in places like Dubai, etc., etc. It becomes a less of a hot prospect in terms of operating and running a business from the UK. I don't know why they do that. We're supposed to be an entrepreneurial society, but it seems they discourage people from setting up businesses.
It's because a lot of them haven't actually ever set up their own businesses, have they? So they don't understand what it's like.
Yeah, so a lot of these people are not business people. They've never run a business. They have no idea what it's like.
Yeah.
So there's a lot of guesswork that's going on.
But on top of this, right, so let's say you increase business rates and then you increase the tax on dividends. All that's going to do is circle back around. The cost of the products are going to get more, and then it's going to cost the working people more money.
Yeah, and they wonder why the high street's dead.
It just circles around.
It's not price competitive.
And then next, everyone's suffering rather than just, I guess, one group, you could say. It's across the board.
I think the net drawbacks and benefit tend to be quite negative. There doesn't seem to be any sort of relief for small business owners. But again, who are we to say what to do?
Yeah, there we go. Anyway,
thank you for listening.
Thank you.
Yeah,
Thanks
perfect.
a lot.
Thank you very much.